Good afternoon, ladies and gentlemen. My name is Danielle Terrelong, Head of Division of DRT Communications here at One Great Studio Company Limited, and I have the honor to serve you as your moderator today for the annual general meeting of One Great Studio Company Limited, supported by Learn, Grow, Invest. On behalf of the company, I extend a very warm welcome to our shareholders and members of the media who are joining us virtually. We are grateful for your time, for your participation, as we reflect on the company's performance and share our plans for the future. Before we proceed, I would like to outline the voting procedures to ensure clarity for all participants. Shareholders and attendees' microphones will remain unmuted throughout the AGM proceedings. During the question and answer segment, shareholders may raise their hands, and once acknowledged, kindly submit to the host to unmute your microphone. If you are able to submit in the chat, please go ahead and do so. Each shareholder is asked to submit only 2 questions initially to allow as many participants as possible. If time permits, additional questions will be taken. For record keeping, shareholders submitting questions should include their full name, and if you are holding a proxy for another shareholder, please state the shareholder's name. The chair will determine which questions we respond to. Voting on all resolutions will be done via e-platform through a poll. Shareholders will have 60 seconds to cast their vote for each resolution, and once it has been moved and seconded by shareholders representing the required quorum. Any moving and seconding of resolutions will be done by the raise hand feature on your platform. Chairman, the company secretary, Rachel Brownie, has confirmed that we have a quorum present as per the company's Article 77, which states that not less than 3 members holding at least 1/3 in the nominal amount of issued shares of the company be present. She has also confirmed that we have 5 proxies.
Thank you, Danielle. This meeting is hereby called to order. Good afternoon, ladies and gentlemen. I am John Bailey, Chairman of the Board of Directors of One Great Studio Company Limited. It gives me great pleasure to welcome you to our 2nd annual general meeting as a publicly listed company. Today's annual general meeting is being conducted via a virtual format, and with some of our directors joining online and others present here with us. On behalf of the full board, I extend a warm welcome to all shareholders and guests attending. I will now introduce the members of your board of directors who are in person and in attendance online. Jacqueline Sharp, non-executive director and head of our audit committee. Simone Bowie-Jones, non-executive director and head of our remuneration committee. Rachel Brownie, executive director and corporate secretary. Mark Ramsey, non-executive director and head of corporate governance committee. Javaine Brownie, executive director and CEO. Gina Dilisa, executive director and chief operating officer. And I'm John Bailey, chairman. Your directors are all well accomplished in their respective fields, and you will note from their profiles on page 21 to 23 of the annual report that together there is good balance of diverse and relevant skills required to lead this company. I would also like to extend a special welcome to our auditors, Crichton Mullins and Associates, represented by Mr. Darshan Dodd. A warm welcome as well to our legal advisors, Myers, Fletcher and Gordon, represented today by Ms. Shanil May Brown. We also welcome our registrar, Jamaica Central Securities Depository Limited, members of the media, other distinguished guests, and of course, our valued team members in attendance. Finally, please join me in extending a warm welcome to the management team of One Great Studio, who will be introduced to you by our CEO at the appropriate time.
Mr. Chairman, I now invite Gina Dilisa, our COO, to offer prayer and to bless these proceedings.
Thank you, Danielle. Let us pray. Lord, we take a moment to acknowledge you your goodness, your grace, your kindness, and constant provision. Thank you for your continued watch care over this company. Thank you for this time to discuss the affairs of One Great Studio. I pray this will be a productive time, a time well spent. We'll be engaging with all the stakeholders present. Please be with us and guide us through these proceedings. In Jesus' name, amen.
Late in these proceedings, we will be hearing from our group CEO, Mr. Javane Brownie, and a representative of our auditors. Shareholders will have the opportunity to submit questions during the designated Q&A segment. We value your input and look forward to a constructive and engaging exchange. While time constraints may prevent us from addressing every question during the session, please be assured that each will be reviewed and responded to individually following the meeting.
The notice of this annual general meeting was dispatched to all shareholders dated April the 29th, 2025, and published in the Jamaica Stock Exchange's website and on the company's website on May the 1st, 2025. If there is no objection, I seek permission of the shareholders that the notice convening this meeting be taken as read. Please note that as I have read this motion, the moving and seconding can be done using the raised hand feature. You should also submit your full name in the chat along with the words moved or seconded. May I have a motion?
Gina Delissa has moved.
Moved by Gina Delissa, seconded by?
I second.
Jacqueline Sharp.
Seconded by Jacqueline Sharp.
Those in favor?
Those in favor? Those against?
The votes are in.
The votes are in and the favor have it. I declare the motion carried. I would like to take this opportunity to acknowledge the excellent work carried out by our board and its committees during 2024. We are deeply grateful to the members for their continued vigilance, diligence, and guidance in overseeing the company's governance throughout the year. 4 board meetings were held during the period, with all directors achieving 100% attendance. As your board, we remain committed to fostering a culture of strong corporate governance, grounded in transparency, accountability, integrity, and compliance. With this foundation, we diligently carry out our responsibilities and manage the business in the best interest of all stakeholders. We also want to reaffirm our dedication to timely communication and investor transparency. To support this, we have invested significant effort in creating a comprehensive and user-friendly investor relations portal on our website. We encourage all stakeholders to visit onegreatstudio.com/investors, where you can access all our quarterly reports, each accompanied by a quick summary document that highlights key information in a concise, easily digestible format. We also invite you to subscribe to our investor newsletter on the same page, so you can stay informed with the latest company news and updates delivered directly to your inbox. Once again, I thank you and now proceed to the formal aspect of the AGM. At this point, I will hand back to our moderator, who will remind shareholders of the procedures for today's meeting.
Thank you, Mr. Bailey. Mr. Chairman, the first item of ordinary business of the meeting is to receive the audited accounts for the year ended 2024 and the reports of the directors and auditors thereon. Before placing the reports to the vote, the auditor will read the findings and the CEO, Javane Brownie, will address the meeting on the company's performance and update you on the current projects and the overall outlook of the company. Once the CEO is finished, the chairman will open the meeting to questions from shareholders on the report of the auditors and the CEO's presentation. We will allow registered shareholders to submit questions via the Q&A chat or ask to be unmuted, and the host will do so. We will make every effort to take as many questions as possible so that we have full participation of our attendees. If there is any difficulty in participating, you may send an email to investorrelations@onegreatstudio.com to advise us of the issue, and this will be sent to the chairman or the secretary. The subsequent items of the business will address the resolutions to re-elect directors and approve the remuneration of directors, the appointment of the auditors for the year ended December 31, 2025, and to authorize the directors to fix the auditors' fees. I will now hand back over to the chairman.
Thank you, Danielle. We now invite Mr. Darshan Dodd, representative of auditors Crichton Mullings and Associates, to read the report of the independent auditors. The key audit matters for the year 2024 are highlighted in the financial statement starting on page 61 of the annual report. Mr. Dodd.
Thank you very much, Mr. Chairman. Good afternoon, everyone. Independent auditor's report to the members of One Great Studio Company Limited. Report on the audit of the consolidated financial statements. Opinion. We have audited the accompanying financial statements of One Great Studio Company Limited, the company, and the consolidated financial statements of the company and its subsidiaries, the group, set out on pages 8 to 48. These financial statements comprise the group and the company statements of financial position as of December 31st, 2024, the group and company statements of profit and loss, the group statement of comprehensive income, the group and company statement of changes in equity, and the group and company statements of cash flows for the year then ended, and a summary of significant accounting policies and other explanatory notes. In our opinion, the accompanying separate and consolidated financial statements give a true and fair view of the financial position of the company and the group as of December 31st, 2024, and of its separate and consolidated financial performance and cash flows for the year then ended in accordance with IFRS accounting standards and the Jamaican Companies Act, the Act. Basis for opinion. We conducted our audit in accordance with international standards and auditing ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. We are independent of the company and group in accordance with International Ethics Standard Boards for Accountants International Code of Ethics for Professional Accountants, including International Independent Standards, IESBA Code. We have fulfilled our other ethical responsibilities in accordance with the IESBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and separate financial statements of the current period. These matters were addressed in the context of our audit of the consolidated financial statement as a whole, and in forming our opinion thereon, we do not provide a separate opinion on these matters. Key audit matters continue. Key audit matter number 1, revenue from contracts with customers. As described in Note 3I, the group recognizes revenue from contracts with customers under IFRS 15, revenue from contracts, when the services have been performed by the group. The standard also requires management to identify the performance obligation in contract services and determine the timing of satisfaction of performance obligation. It also requires management to determine whether it acts as a principal or agent in executing the contracts, and if there are significant financing components included in the promised payment amounts. How was it addressed in our audit? We have obtained and reviewed management's assertions and assessed the underlying assumptions used to support the calculations as required by IFRS 15. We also evaluated the appropriateness of the group's revenue recognition policy in relation to the requirements of the standard. We reviewed management's computations and independently reviewed a sample of contracts and evaluated them as follows. We obtained and reviewed signed contracts to validate that legitimate contracts exist with customers. We verify the transaction prices that are explicitly stated in the contracts associated with the relevant performance obligations. We obtain and review invoices on a sample basis, along with supporting reports confirming evidence of work carried out and performance obligations met. Additionally, where bundle services were offered, we assess whether the transaction price should be allocated to each performance obligation. Based on the above, we verify that revenue was properly recognized in the correct period. We also reviewed the disclosures for compliance with IFRS 15. Key audit matter number 2, expected credit loss on trade receivables. The group is required to recognize expected credit losses, ECL, on trade receivables, the determination of which is highly subjective and requires management to make significant judgments and estimates, including determination of the appropriate variables and assumptions used and the application of forward-looking information. The risk of material misstatements increases as significant management judgment is used in determining the appropriate variables and assumptions used in the ECL calculations. How was it addressed in our audit? Our audit procedures to address the key audit matter relating to the expected credit loss on trade receivable included the following. Obtaining an understanding of the model used by management for the calculation of expected credit losses on trade receivables. Testing the completeness and accuracy of the data used in the ECL models to the underlying accounting records on a sample basis. Reviewing the ECL model to assess appropriateness of the group's impairment methodology, management's assumptions, and compliance with the requirements of IFRS 9 financial instruments. Evaluating the appropriateness of the economic parameters, including the use of forward-looking information. Testing the accuracy of the ECL calculations, testing the recording and aging of trade receivables, assessing the adequacy of the disclosures of key assumptions and judgments for compliance with IFRS 9 financial instruments. Based on the procedures performed, management assessment of expected credit loss on the trade receivable appears reasonable. Key audit matter number 3, intangible assets impairment assessment. The group has intangible assets of 333.8 million arising from the acquisition of High Voltage Digital LLC operations, which represents 46% of the total assets as at the year end. The annual impairment assessment requires management's judgment and estimation in determining estimated future earnings from the subsidiary, taking into consideration the inflationary rate, the economic growth rate, and other underlying assumptions. How was the matter addressed in our audit? Our audit procedures to address the key audit matters relating to the impairment of intangible assets assessment included the following. We have reviewed management's assertions, including the identification of the underlying cash-generating assets. We have assessed and reviewed the subsidiary's historical performance and compare actual results to the approved budget. The analysis of the external and internal environment was taken into account in the assessment of the subsidiary's performance. Based on the procedures performed, management's assessment of intangible assets impairment appears reasonable. Other information. Management is responsible for the other information. The other information comprises information included in the annual report, but does not include the consolidated and separate financial statements and our auditor's report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and separate financial statement does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection With our audit of the consolidated and separate financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate with the board of directors. Responsibilities of management and those charged with governance for the financial statements. Management is responsible for the preparation of consolidated and separate financial statements that give a true and fair view in accordance with IFRS accounting standards and the Act, and for such internal control as management determines is necessary to enable the preparation of consolidated and separate financial statements that are free from material misstatements, whether due to fraud or error. In preparing the consolidated and separate financial statements, management is responsible for assessing the group's and company's ability to continue as a going concern, disclosing, as applicable, matters relating to going concern and using the going concern basis of accounting, unless management either intends to liquidate the group or to cease operations or has no realistic alternative but to do so. The board of directors is responsible for overseeing the groups and companies' financial reporting process. Auditors' responsibilities for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statement as a whole are free from material misstatements, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but it's not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in the aggregate, they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. A further description of our responsibilities for the audit of the consolidated and separate financial statement is included in the appendix to this auditor's report. This description, which is located at pages 6 to 7, forms part of our auditor's report. Report on additional matters as required by the Act. We have obtained all information and explanation which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records and the consolidated and separate financial statements, which are in agreement therewith, give the information required by the Act in the manner required. The engagement partner on the audit resulting in this independent auditor's report is Larry Mullins, signed Crandall Mullins and Associates, Chartered Accountants, Kingston, Jamaica, February 27, 2025. Appendix to the independent auditor's report. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatements of the group and company financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may include collusion, forgery, intentional omissions, misrepresentation, or the override of internal control. We also obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and company internal control. We also evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. We also conclude on the appropriateness of management's use of the going concern basis of accounting and, based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the group's and company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to related disclosures in the financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group and the company to cease to continue as a going concern. We also evaluate the overall presentation, structure, and content of the group and company financial statements, including the disclosures, and whether the group and company financial statement represent the underlying transaction and events in a manner that presents a true and fair view. We communicate with the board of directors regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. We have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our audit opinion, proper accounting records have been maintained so far, as from our examination of those records, and the group and company financial statements therein give the information required by the Act in the manner required. From the matters communicated with the board of directors, we determined those matters that were of more significance in the audit of the consolidated and separate financial statements of the current period, and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulations precludes public disclosure about the matters, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our audit, in our report, because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Mr. Chairman, this is the end of the auditor's report. Thank you very much.
Thank you, Mr. Dodd. Before we proceed to the resolutions, I would like to invite our CEO, Mr. Javane Brownie, to share key highlights of the company's performance over the period, as well as the strategic direction moving forward. Javane?
Thanks, Chair. Good afternoon, everyone. It's an honor for me to be sharing with you today. It's our second AGM, and it's really a big moment for us at 1GS for us to connect with our shareholders. We don't get this opportunity every day, so I'm really excited to be here and to connect with you guys, to hear from you, and to discuss this business which I've poured my life into, which our entire team have poured their lives into as well. And our objective this afternoon is to give you, our shareholders, who we value. You guys have trusted us. You've come in, you've believed in what we're about. And last year we spoke about the business and what we do. This year we want to talk a little bit more about our strategy and how we see the future for 1GS. And so that's what we're going to do a little bit. So we're going to go through, I'm going to try and mix that in with the financials as we go through everything. And when I'm done, I'm going to share with you guys a video which summarizes a lot of what we've been working on. So I'm just going to walk through. So we started in 2012. That's when we were incorporated, and we started out as a design and development agency. Since then, we've grown strategically through retaining clients, adding new clients, and additional new business lines and services. Between 2015 and 2021, we focused on organic growth and adding new services over time. And that includes between 2025 and 2021, we added strategy, content production, social media management, and digital ad management. In 2022, we added SEO through the acquisition of HB SEO. In 2024, we had success launching our quick start products and refining our host brand strategy, which I'll tell you a little bit more about in a few. And in 2025, we're leaning even more into that strategy with the acquisition of DRT Communications, now adding PR and media monitoring to our service offerings. This is a quick look at our 5-year performance. For the year ended 2024, December 2024, our revenue was 342 million, which is a step down from 2023. But for us, this year was all about investing in reshaping the business. We made deliberate choices to invest in a structure, in people, and the platforms that will fuel growth for us as a business in 2025 and beyond. These changes impacted top-line growth and in the short term, but it positions us in the long term, in the medium term, to deliver more sustainable, higher quality revenue going forward. Net profit came down as well in 2023. It's down to 36 million. And what stands out here is what we were able to achieve while we were still making significant, substantial investments in the business. We integrated new teams. We rolled out shared services across the board. So that's now shared services for the different brands, HR, finance, sales, and operations. And we also strengthened our leadership structure. These steps take time, resources, and coordination, but they're essential to building a business that can operate at a higher level. Staying profitable through a year of transformation says a lot about our resilience and operational discipline. It also means we're able to deliver returns to shareholders, even as we reinvested heavily in the future of the company. Let's look a little bit into 2024. These are our financial highlights. Top line was 342 million, total assets 678 million, total equity 609 million, net profit 36 million. At the end of 2024, our cash ratio, including our investments, was 5x, which means that we had 5 times the amount of cash to cover the liabilities there. Key client metrics, you'll see that we report on this every year. At the end of the year, we'll sum up our clients, and quarterly, we'll report on what happened in that quarter. So when you are reading our quarterly report, you can look on those numbers and say, all right, that's the number of clients that you served in just one quarter. And at the end of the year, we add them up and we see where we are. So at the end of 2024, we served a total of 130 clients last year. We had an average client spend of 2.6 million dollars, and we had 82% of that revenue coming from retainers. Now, retainer revenues are important for us because that is steady, it's consistent, it's cash flow every month. So as a business, it's a big part of our strategy to maintain higher levels of retainer revenues. We want to balance retainers and projects, but we lean a lot into retainers, and we think it helps with the stability and the overall well-being of the business. Look at the income statement here. So we can see we had a slight reduction in revenue, which we spoke about before. And what we can see here is that we had an operating margin of 12% and an EPS of 2 cents per share. You know, we have spoken about the impact last year. We spoke a lot about the impact of platform changes on our SEO business. And while we navigated those changes, our team has been focused on laying the foundation to grow the other business lines, right? 1GS is a people business at the end of the day. We don't have trucks on the road or products on a shelf. What we have is our people. And when we invest in people, we invest in growth. But that growth takes time as we acquire, as we train, and as we integrate new team members into the business. And we've been working to find the right balance there. It's not always easy to achieve that balance. If we invest too heavily without the right focus, we risk weakening the short-term performance. And this year, we made the right calls at the right time, growing our capabilities, strengthening our operations, and keeping profitability healthy. The benefits, of these decisions will be felt not just in the next quarter, but for years to come. And that will keep the business strong, competitive, and positioned for long-term value creation. Let's take a look at the balance sheet. At the end of 2024, our balance sheet was quite similar to how we ended 2023. We had a marginal increase in total assets. The most notable changes were increases in both current and non-current liabilities, which were primarily connected to the significant increases in customer deposits. So when a customer pays us, as Mr. Dodd spoke about earlier, if they pay us up front, we don't recognize that revenue. And so that we don't recognize it as revenue initially. It goes to the balance sheet as a prepayment, and then we earn that revenue over time. At the end of 2024, we had more deposits on book than in the previous year. And so that's one of the main drivers for the increase in liabilities. And then the second thing is that we moved from a month-to-month lease on our office to a longer-term lease. And with the IFRS standards, then you have to recognize that lease liability. So those are the two things there that would drive the liabilities that you see there going up in 2024 when compared to 2023. Now, some of our financial ratios over the last 5 years, our gross margins have spanned between 40 and 60%, really. In 2024, we experienced some contractions in the gross margin, which was largely due to the reduction in SEO revenue, which was our highest margin business line at the time. Increasing our gross margin is a key area of strategic focus for us right now. It's something that every department leader, every business leader, every brand leader here at OneGS is focused on. And we're monitoring that closely as we work to make the necessary changes to maximize that. Let's look on our 2025 year to date, where I'm actually getting excited about what's happening in the business and seeing some of what we've been working on unfold and start to pay dividend. So our income statement, when we look year over year, 2024, 2025, we had about a 3.5% increase in revenue. We had a year-to-date net loss, which is primarily connected to the loss we posted in Q1 as we ramped up our growth initiatives through the DRT acquisition and investments in shared services. I'll explain to you a little bit about what the shared services is. As a part of our host of agency brands or our host of brand strategy, we are developing a shared service infrastructure, which includes HR, finance, it includes creative operations. I'm going to talk a little bit more in the video about that. And so that back office is built to provide services for all the different brands. And as you hear us talking about host of brands, what we're going to be doing is growing the brands that we have at OneGS. And then we're going to have centralized services. So some things that the brands focus on specific things, but the running of the business, the keeping things going forward is going to happen in a centralized place, which is going to allow us to keep our operating costs down while we grow our top line. And so really what we've been doing is that we've been investing in new growth with the DRT acquisition and also in investments in the shared services so that our infrastructure can manage more brands. Because previously we had 2 brands, we're now 3, and we intend to keep growing that number. And what we want to have in place is a shared service infrastructure that can manage not just where we are today, but where we are 2, 3, 4 years down the line. And we're very excited about where we are with that. And we feel confident that we'll be able to scale our top line without proportional scaling of the operating expenses, which would return the profitability back to the business as we reap the rewards from that investment and from those investments. I want to just give you a quick walkthrough of that and what that looks like here. So if you look on this is our quarterly revenue over the last, I guess it would be 1, 2, 3, 4, 5 quarters. And you can see here how at the start of last year, in Q1 2024, you can see how dominant the SEO business was, the SEO brand was in our revenue mix, right? And as you see that trending down, which we spoke about that happening before, you can see the increase in like OneGS revenue because we've invested in that side. And if you look on Q2 2025, you will start to see that it's balancing out and we have our highest revenue that we've had in the last 5 quarters in our Q2. So though we have a loss when we look on the year to date, we're really zoning into Q2 and seeing that the investments that we've been making in our shared services, in growing our top line, we're starting to see that here with over $105 million in revenue in Q2 2025, which is a 39% year over year. It's a 39% increase over Q1. And it's a 24.4% gain year over year. So we've been investing in diversifying our revenue, and now we're seeing the results with all 3 brands that we have and operate right now, HVSEO, OneGS, and DRT, all contributing between 30 to 38% of our total revenue in Q2, which is more balanced revenue, which is a big part of what we've been working towards here at OneGS. So let me tell you a little bit more about the host of agency brand strategy and what it means for you as a shareholder and for the business. So having multiple brands allows our clients to have a better experience. Niche brands improve client experience. Our teams are more focused, are better skilled, and with deeper expertise in their respective niches. Having multiple specialized brands allow us to serve our clients deeper when the brands work together. And we're starting to do more of that in 2025. And that's something that the team is really excited about, and that the team has, they're learning from each other, and we see a lot of collaboration, and we're looking forward to that increasing as we go forward. We spoke about investment in shared services already, and at the end of the day, those investments is what we believe will enable us to actually grow the business and to support the growth that we're planning for in our upcoming quarters and years. A quick summary of our DRT acquisition. I guess this is the first time that we're talking to all the shareholders about DRT and our acquisition there. So it was a total investment of 150 million, and that investment was split to $80 million in cash with $35 million in performance-based earnouts. And what that means is if the business performs as we expect it to, then we'll have to pay more. And if it underperforms, then we pay less. So we have a maximum of 115 million, and we have a minimum of $80 million that we will pay for that particular transaction, right? And with that acquisition, what we've done is that we've added 2 new business lines. We've added PR and we've added media monitoring. We've also added 20 clients, and in Q2, 34% of our revenue came from that acquisition. So this is a big deal for us. In the face of challenges in one brand, we have stepped up, we've invested, we've grown our 1GS brand, and we've also invested and we've acquired another company. And when we look on the overall business, our revenue is trending in the right direction. And what we need to work on now is managing our costs, continuing to be disciplined there, and growing the top line to return margins and profitability to the business. So our balance sheet at the end of Q2 would look different to our balance sheet at the end of 2024. Why? Because we had an acquisition. So we paid out $80 million in cash. So you would say our cash and cash equivalents going down, right? And we also, so you can see that there with the cash and cash equivalents going down. We have more liabilities now. The liabilities are primarily driven by the $35 million contingent liability that I spoke about from DRT, as well as $10 million in prepaid income from clients and $14.4 million in trade and other payables. So really the bulk of the increase in our liabilities stem from the acquisition, as well as prepaid income, which I think is a good thing there, because at the end of this is compared to at Q2 2024, we didn't have prepaid income on our books, but now we do have prepaid incomes. We are receiving more cash from our clients up front, which I think is a good thing, as we are funding the operations of the business out of the cash flow of the business and not dipping into our reserves to actually fund our operations. We are reporting lower levels of debt as well, which positions us to be in a place where we can take advantage of other inorganic opportunities that may arise in the near or medium term. Looking out, we operate in an ever-changing, ever-evolving environment. Tech is advancing rapidly. Advancement in generative AI is already transforming how we work and serve our clients. And we're starting to see shifts in consumer patterns and behavior. And there is no doubt that that trend will continue. In the coming quarters, you might see jobs changing because of the advancements in technology. You might see certain services becoming irrelevant because of advancements in technology. But at the end of the day, at 1GS, we embrace technology. We don't hide from it. We love tech. We lean into tech. And we see AI as an ally, and even more than an ally, right? But let's talk about AI as an ally first. We want to work smarter, more efficiently, and more effectively with AI. We don't want AI to make people stop thinking. We want people to assign simple things to AI or routine things to AI and use AI to bring more information to you. Use AI to help you to be more creative. That's kind of what we've been focused on in the business. And we've been using AI, integrating AI. We spent time developing our policies, because that's another thing. We have to develop policies. How can you use AI? How can't you use AI? Where can you use AI? When can you use AI? And so we've done the work. We've done that groundwork. We've picked our toolkits. We're always experimenting with new things as well. So AI is an ally, and we will embrace technology. We will keep leaning into technology. The tools might change, but the results that people need won't change, right? And so our objective, we always stay close to the results. And I'm going to show you some of that shortly, because at the end of the day, what people pay us for is for results, to help them to grow the top line through marketing or to maintain costs through building technology and using technology to basically do things that people would normally do. That's really a big part of our business. And so at the end of the day, we see AI as an ally and more. And the and more for us is we're starting to look into opportunities where we can explore, where we are exploring AI services for revenue generation. We're in the early days, but it's something that makes us excited, but we have to keep at the forefront of the research and development. So our teams are always staying ahead. We're using different things. We're experimenting what's happening with our clients. We're really pushing into that and staying ahead of what's happening, having conversations all the time because we understand the industry is changing and we're embracing those changes, leaning into those changes, while we also observe the legal and regulatory environments because those changes may be impacted by regulations as those roll out. So we also have to be careful how deep we dive until we see the full regulatory environment unfolding. But for now, with the regulations that we have, or the lack of regulations that we have, we're leaning all in and we're jumping in, and we are already using the new technology to be more efficient in our operations, but also to drive greater impact for our clients. And at the end of the day, that's what we're about. We're about impact for our clients, whether in DRT, doing PR and media monitoring, whether in HV, doing organic search, driving traffic to websites, or whether in 1GS, where we do websites, apps, and digital marketing. At the end of the day, our clients really want results, and that's what matters, and that's what 1GS focuses on. That's one of our differentiating factors, is that our team obsessively focus on driving results for their clients. And we think that sets us apart because our teams are thinking about the business that we're serving, that the clients have. They're thinking about how to drive results, and they're not just thinking about what looks good, but they're thinking about what's going to convert, what's going to work, what's going to achieve the business result that our clients have. And at the end of the day, results matter. And that's what we are pushing here at 1GS for our clients. I'm going to show you some of the results. These are results from our SEO business. And we start there. In the face of all the changes in SEO, what we have is a client example here that we did blog refreshes for AI. So there are tweaks that you can make to existing blog posts to improve those blog post performance in AI search engines, like a Perplexity, a ChatGPT, or Google AI overviews, right? And what we saw is that we had a 30% increase in traffic for that client through their blogs and the refreshes that we did across those different platforms. So we're not just optimizing for all blue links in Google. We're now optimizing for ChatGPT and Perplexity as well, and these AI engines, right? We see another case where Google Merchant Center, where we optimize their Google Merchant Center. And what we saw is that 30% in increase in shopping visibility. And we saw a 30% decrease in paid customer acquisition costs. And so what that means is that they're getting more organic visibility and they have to spend less on ads in order to get the same results or even better results for the business, right? That's the business that we're in. We're about results for our clients. And even in the face of all these platform changes, we continue to experience great results for our clients, which is what keeps people coming back, investing in, working with us, and really the longevity of our client relationships speak to that, because even in the SEO business, what we've seen is that we've seen lower churn as clients are trusting us even more in the face of all these changes, and they're sticking with us longer because our service is good and because we offer a great service here at 1GS. We also refreshed a couple pages, well, not a couple, we refreshed pages for intention and conversions. And what that means is that when somebody goes to a page, typically the person is looking for a particular thing. Now, if you're searching for X and you get a pay for Y, you're just going to close it and you disappear. And that's called bouncing, right? And if you leave, then you never actually accomplish what it is that the business wants. And so matching a user's intent with the page that they end up on is very important. And so in search engine optimization, instead of just focusing on getting the most traffic, what we want to do is to get the most targeted and relevant traffic for people, which might mean sometimes that the volume is going to go down, but you're going to get the right people coming to the page, which is going to increase your conversion rate. And also we see a big increase in 23% increase in their revenue through those changes that we made on their site. So that's a big deal there from our HV team. Show you a little bit from our DRT team. And these are PR results for a client in the financial sector. This client spent $53,000 over, I think, a 7-month period. And what they ended up with was 108,000 impressions, which was almost like it's just a 47% increase year over year for that period. 692.7K AVE, and what AVE stands for is advertising value equivalency. So basically, it's an organic PR mention. And what you do is you say, for this mention, if you were to get that kind of reach, that kind of visibility from an ad, this is how much that you'd be spending. So it's basically the rate of the value of the exposure that comes from an organic PR mention or an article or a story or people talking about you on the radio or on TV. It's the value for that that's unpaid. If you were paying for an ad, how much would you have to spend to do that? And so essentially what you see in there is a 13x return on investment because the client they pay $53,000 and they got $692,000 in value from that particular investment. Again, big results, massive results. And that's the kind of work that we do at 1GS. We love to be focused on results and all our brands. That's something that is consistent across all our brands. Here is an example from 1GS. We're looking at, this is results from digital ads, which is another area that we're very strong in, where we see where we're having growing reputation, and we see a lot of businesses in the Caribbean coming to us to run cross-platform ads across multiple regions. For this client, I think we're running ads in 15 to 20 regions for them. And they spent between April and July a total of $75,000. We generated 111 million impressions for them, 700,000 people visiting their website, 6,546 leads at a cost per lead of $11.54 US, right? So what this means is that every person that they get to a sales rep that say, here's a number, here's somebody who said that they're interested in a vehicle, and it's a high-end vehicle. They said different ranges. That's less than $2,000. And for less than $2,000, they're getting a lead, which is somebody raising their hand and saying, hey, I want a car. And that's great results here being generated from our team at 1GS. So how do we feel about the future? You know, we always say, and that's the way that we're feeling right now, we think that great things are ahead for 1GS. Why? Because we are in a position to focus on growing our existing brands. We're in a position where we have 3 strong brands, where there's opportunity for growth for all our brands, even the SEO brand, even though it's down. What we're doing right now is that we're pivoting. We're looking on new opportunities. We're looking on new markets. We're leaning into e-commerce more because e-commerce businesses are being prioritized by Google right now. And so we're pushing into there. We're pushing in. We're investing in marketing. We believe that SEO business side will pick up and start to trend upward in the upcoming quarters. And we're doing the work to ensure that happens. We're not just hoping, we're putting in different things to help us achieve that objective. As we grow each brand, we think there's plenty opportunities for DRT. Even since the acquisition, we've seen growth month over month, quarter over quarter in DRT. We've seen experiencing the same thing at 1GS as well. The demand for our services regionally are increasing as our reputation is getting better. People are knowing more about us in all the different areas, and we're becoming known for the things that we're really good at, driving results. That's bringing people into the business, and then cross-selling is the other area there that we're now cross-selling more. With the integration of DRT, we are cross-selling already with DRT. So things that DRT couldn't do before, they're now doing. Things that we couldn't offer at 1GS before, we're now doing, and we're delivering and co-delivering those services. And this year, we're finally having some of that on the SEO side as well. So that's very exciting because we think there is plenty of room for us to have organic growth in the business still through our existing brands. We also have our shared services to drive efficiency, which we spoke about earlier. We have creative ops, which is our creative team, centralized now. They can work across brands depending on where the needs are. We have our finance, our admin, our HR teams, and we have enough infrastructure there to power the next stage of growth that we're looking forward to. We will also be adding selectively adding new brands as the upcoming quarters and years unfold. We have ideas, we have areas that we're going into, we're working on different things, and we can't wait to share more with you about that. Sometimes it might be an existing service that we say this is service own brand. Sometimes it's going to be new brands that we are bringing into the fold through acquisition. And so we have opportunities there that we're always monitoring, that we're always working on, and we will let you know as soon as we have something concrete to tell you in that regard. I said this last year, something similar, and then you saw the DRT acquisition coming through here. I'm saying that again because it's a part of our model. We're a host of agency brands. We are a host of brands. And what we're going to do is keep growing those brands. And as we grow those brands, we're going to see the top line growth going up, and we're going to maintain our operational costs. We're going to manage that in a way that we get margins in the business and we can really scale the business. What we're trying to do is empower scale. Another thing that we're really looking forward to do is transforming sectors through marketing and tech. We believe that there are some sectors in the Caribbean that are underutilizing marketing and tech in terms of where things are today. We think we're 7 years in some cases behind where the world is. We think in some cases we're about 15 years behind where the world is. And what we want to do at OneGS is to invest in a couple of those sectors and bring products into those sectors that will transform those sectors, and we will earn revenue from that. So that's kind of how we're looking ahead. We are super excited about it. And I want to share a little bit more from I have a video to share with you. Because the truth is, even though I'm here, I'm the CEO, I'm speaking, we have an amazing leadership team. We have Gina DeLisso, our COO, who will talk to you a little bit in the video. We have Lorianne Evelyn, who is our CXO, Daniel Terlong, our head of division at DRT Communications, and Julia Mondo from HVSEO. She's our GM. They're going to tell you a little bit more about OneGS, where we are and where we're heading. And I'll just invite Jeremy to just run that video. It was good sharing with you all. I will be here, and I'm sure I'm going to talk again a little bit more during the Q&A time. But for now, we're going to just jump over to the video. In 2024, I was proud to lead and be a part of a team that is resilient, super creative, and most of all, passionate about delivering great service, both internally and externally, which always yields the best result for every stakeholder. Yes, we're a digital-first agency, and we continue to evolve into something much bigger, an agency that is more strategic, more diverse, more creative, more connected, more future-ready. OneGS is becoming the agency of tomorrow. In a shifting market, both locally and internationally, we held our ground with $342 million in revenue, serving over 130 clients, with 82% of that coming from retainers. We delivered a 10% net profit margin, and even more importantly, we laid the foundation for what comes next, our house of agency brands strategy. OneGS operates as a house of agency brands, which simply means we own and operate multiple brands. Each brand is positioned to own a specific niche, branded with its own voice, messaging, and value proposition, and is complementary to the other brands for cross-functional campaigns and projects. To gain efficiencies as we scale, our brands leverage a common set of shared services, which includes our HR, finance, creative operations, and tech. We've made a series of investments to build out our unified infrastructure, and this will ultimately power our next stage of growth as we work to grow smarter, better, not just bigger. With this in place, our next chapter is about continuing the momentum, executing our strategy, with plans to grow each brand in our portfolio while selectively integrating new brands to meet the present and emerging demands of the market.
What began as a strategy has become part of our DNA. A way of working that continues to open new opportunities to grow and lead. We're building on a foundation that allows us to scale at the pace required so we can be hyper-focused on executing strategy. In 2024, we launched our video production business line and expanded our digital services. We also introduced 2 affordable, low barrier to entry products, Real Deal and Snapsides. Our goal was to be better outfitted for current market demands and client-based diversification. We live in a world where video is not just a nice to have, it's a necessity. Video has become one of the most effective formats in digital communication. Platforms push it, audiences prefer it, and it has become the go-to language of social media, e-commerce, and branded content. From product explainers to brand storytelling, social-first campaigns, tutorials, people and culture pieces, and the ever-trending podcast. By investing in this business line, we've been able to tell more powerful stories, deliver a more seamless content experience, and transition from third-party vendors to an in-house team. The impact? We can produce more, earn more, and retain greater value. So, in 2024, One Great Studio has done more than move toward the vision we talked about here last year. The company feels stronger, the work feels sharper, and the impact is already showing. We're building an agency that works more seamlessly and creates more opportunities under one roof to support both our clients and our team members.
And that's where client experience comes in. We're always adapting, always listening, and always evolving. We continue to lay the foundation to ensure a great client experience across the group, from project delivery to feedback loops under a single client success strategy. We've been focused on upskilling our team across client success, strategy, and data because in our world, client experience is not a department, it's an ecosystem. We even added her this year. Hey! Meet Sarah, our head of service delivery at OneGS, and she's pretty awesome. The benefits are becoming clear. Teams working more closely across the group, enabling faster execution, smarter resource use, and more tailored client solutions. This structure also gives us the agility to enter into new regions and types of work while still staying focused. We're seeing measurable growth, strengthened client relationships, diversified revenue streams, and greater stability across the group. When clients feel heard and served, they stick with you and they grow with you. And really, our goal is to build an experience where our clients can't imagine their lives without us. That's been our focus, and we're working every day to define and refine that.
You've probably heard people say SEO is dead. But here's the truth. People haven't stopped searching. They've just changed how and where they do. Almost all clicks, 94%, still go to the free organic results in Google, not the ads. Google is still the go-to with 99,000 searches every second. More than half of that is on phones, and quick answers at the top of the page can get almost 43% of all clicks. Now, AI tools like ChatGPT, Perplexity, and Google's own AI summaries are also answering people's questions. This means businesses can show up in even more places if you prepare for it. We still call it SEO, but it's no longer just search engine optimization. It's search experience optimization. We make sure businesses show up wherever customers are looking. Google, AI answers, social media searches, and more. And that when they find what they are looking for, the experience is so good that they want to click, stay, and buy. At H3SEO, we've run over 400 tests to figure out exactly what makes businesses appear in these results. Not just on Google, but in AI tools and even social platforms. This year alone, we doubled the number of people searching for an e-commerce software client's brand in 6 months, turning that into a 6.4% subscription conversion rate. Lifted sales by 23% for a supplements brand in only 3 months by reworking their category and product pages, and boosted organic visibility and optimized Google shopping feeds, so some clients cut paid ad spend by almost 30%, saving thousands while still growing traffic. Search isn't dying, it's evolving. The brands that invest now in search experience optimization will own the future of online growth. This is the biggest opportunity in front of us right now, and we're already helping our clients seize it.
And with that, let's look at 2025, where things are getting even more exciting. For the quarter ending June 30, 2025, our revenue surged upwards 25% year over year to $105 million. We're starting to see the positive impact of our revenue diversification strategy, which includes our recent acquisition.
In February 2025, DRT Communications officially joined the 1GS Group. Bringing with us decades of experience, DRT Communications is a leading PR, marketing communications, and media monitoring division here at 1GS. We help our clients gain organic visibility across traditional and digital media outlets through strategic public relations, strong storytelling, and robust crisis management support. We work closely with publicly listed companies and those wanting to go public, government entities, and major brands to ensure their reputation and communications are always on point. Through our media monitoring services, we empower clients to stay on top of what's being said about them across TV, radio, newspaper, social media, online platforms, and websites. We also provide advertisement tracking, ensuring brands get the placements they pay for while monitoring competitor activity so they can make data-driven marketing and brand decisions. Over the years, we've proudly partnered with more than 130 clients, including leading names like Sagicor, the Caribbean Development Bank, JPS, KFC, Omni Industries, Spurtree Spices, Red Stripe, Wisynco, R.A. Williams, Ray Nephew, and the list goes on. It's been powerful to merge our operations into an organization that's built for scale and grounded in purpose and great values.
And through all of that progress, we never lost sight of the bigger picture, always ensuring that we do good. Do good is a core value that drives how we serve our team, our clients, our shareholders, and our wider community. In 2024, we plunged again into the White River for the 4th annual Swim for the Sanctuary, swimming shoulder to shoulder with partners to help protect the reef that keeps those waters alive and thriving for future generations. We supported the sanctuary not only by showing up in the water, but also by providing creative sponsorship to help raise awareness and inspire more Jamaicans to care about the ocean's future. At Jack's Hill Primary and Infant School, we continued one of our favorite traditions, now in its 3rd year. We decorated and distributed personalized Christmas gifts for the students and teachers, closing with a heartfelt devotion about the meaning of giving. We also awarded uniform grants to successful graduates matriculating to high school. Moments like these remind us that growth has its deepest meaning when the communities around us benefit. A rising tide truly lifts all ships.
So, what's ahead for 1GS? We'll continue to focus on growing each of our brands. We'll build out our shared services. We're actively looking at acquiring and launching other brands. Long-term in our thinking, regional in our ambition, and global in our standards, with a team culture that wins together. We're building the agency of the future, rooted in technology, creative excellence, and insights that shape markets. Keep your ear to the ground, because there's so much more to come. We're driven by our core values. Don't be greedy.
Think long-term.
And do good.
That's how we win. That's how we grow. That's one great plan, and we're committed to it for you, our shareholders, our teams, and clients. And as Noah said, let's go!
And we now invite shareholders to raise any questions or comments and of course commendations regarding the reports or the business of the company. If you would like, you can request to speak and the host will unmute your mic, or you can put questions in the comment. I'll ask Gina Delisa if she could please respond to the question from Tiffany Barrett. Tiffany would like to know, why is the stock going down? That's literally the only question. Are there dividends plans to improve the stock? Please answer in terms that I can understand, not financial jargon. Thanks. Gina?
Thanks, Tiffany. I think that's a great question. And I think it's important to just address that question. We know that the stock market on a whole has been on a decline, with some of the liquidity going to the fixed income market. But we do hope that the promising results that we've shared today just outlining our future plans for growth, the aim to grow in this strategic manner, looking at organic growth and adding new services and the possibility of even more acquisitions in the future, that you will see that we have a great focus on long-term growth and stability. And we do believe that that will impact our stock price, hopefully in the near medium term future. Regarding the question about dividends, that's something that we will have to discuss and decide at a board level in the future at the appropriate time. But we can give no further notes on that right now. But all of us here who are shareholders definitely want dividends. And when we're in a position to do so, we will be prudent as we make those decisions at the board level.
Thank you so much, Gina. Also, we have another question from Tiffany. And I'll direct this one to Javain. Are all brands mentioned under 1GS or are they adjacent? Javain?
Hi, thanks, Tiffany. I think you asked two very good questions. All the brands that we've mentioned today are 100% owned by 1GS currently. That's our primary approach to our brands. Not to say that it won't be different in the future, but every brand mentioned here is 100% owned by 1GS currently.
Thanks so much, Javain. Chairman, if you would be so kind, we will move ahead. But shareholders, if time did not allow for your question to be addressed during the meeting, we are here to answer questions that you can send to investorrelations@onegreatstudio.com, and we will be certain to give it the attention it requires.
Thank you to all our shareholders for your insightful questions and contributions, which will no doubt continue to inform the strategic direction of management and the board. We'll now proceed to vote on the resolution for the adoption of the audited financial statements for the year ended 2024, together with the reports of the directors and auditors.
Chairman, we have now reached the section of our AGM where we will present our resolutions to the shareholders. We will begin with Resolution 1, that the audited accounts for the year ended December 31st, 2024, together with the reports of the directors and the auditor, be approved and adopted.
Chair, do I have a proposal?
Gina DeLissa has proposed.
Thank you, Gina. Is there a seconder?
Mark Ramsey has seconded.
Thank you, Mark. I now put the resolution to the meeting.
The resolution is placed on screen. Shareholders, you have 60 seconds to vote electronically by selecting for or against. Please use the poll on your screen to indicate your vote, and the 60 seconds begins now. Mr. Chairman, I can see that we have 28 votes for.
Thank you. The votes in favor have it. I declare the motion carried.
Mr. Chairman, we will now move to Resolution 2 on the agenda, which addresses the re-election of directors. The summaries of the profiles of directors who are up for re-election can be found on page 21 through 23 of the annual report. Mr. Chairman, in accordance with the Article 114 of the Company's Articles of Incorporation, 1/3 of the directors, those who have been serving longest in office since the last election, shall retire. The retiring directors are Jacqueline Sharp, Javain Brown, and Gina DeLissa. Pursuant to Article 117 of the Company's Articles of Incorporation, all the retiring directors offer themselves for re-election. As such, Resolution 2, that Jacqueline Sharp be and hereby be elected as a director of the company.
Do I have a proposal?
Gina DeLissa.
Thank you, Gina. Is there a seconder?
Jim Rachel Brownie.
Thank you, Rachel. I now put the resolution to the meeting.
Shareholders, you have 60 seconds to vote electronically by selecting for or against. The 60 seconds begins now. Mr. Chairman, I can report that there were 29 votes, 28 in favor and 1 opposed.
The votes in favor have it. I declare the motion carried.
Mr. Chairman, that Javane Brownie be and is hereby re-elected a director of the company.
Do I have a proposal?
Miss Simone Bowie Jones.
Thank you, Simone. Is there a seconder?
Chanel May Brown.
Thank you, Chanel. I now put the resolution to the meeting.
The resolution is placed on your screen. You have 60 seconds to vote electronically for or against. The 60 seconds begins now. Please use the poll on your screen to indicate your vote. Mr. Chairman, I can confirm that there were 28 votes, 27 in favor and 1 against.
The votes in favor have it. I declare the motion carried.
Mr. Chairman, that
Gina.
Ms. Gina DeLissa be and is hereby re-elected a director of the company.
Thank you, Daniel. Do I have a proposal?
Mark Ramsey.
Thank you, Mark. Is there a seconder?
Simone Bowie Jones.
Thank you, Simone. I now put the resolution to the meeting.
The resolution is placed on the screen. You have 60 seconds to vote electronically by selecting for or against. Please use the poll on the screen to indicate your vote. Mr. Chairman, I can confirm that we have 29 votes, 28 in favor and 1 opposed.
Thank you, Daniel. The votes in favor have it. I declare the motion carried. On behalf of the board, I thank the shareholders for this vote of confidence. We will now move to the next item of business on today's agenda.
The next resolution before the meeting is resolution number 3, that the shareholders of the company hereby delegate their power pursuant to Article 107 of the Articles of the Company to the Board of Directors of the company, who is hereby authorized to fix the remuneration of the directors for the current year.
Thank you. Do I have a proposal?
Javain Brownie,
Thank you, Javain. Is there a seconder?
Gina Delissa.
Thank you, Gina. I now put the resolution to the meeting.
The resolution is placed on your screen. You have 60 seconds to vote electronically by selecting for or against. Mr. Chairman, I can confirm that there were 25 votes, 24 in favor and 1 opposed.
The votes in favor have it. I declare the motion carried.
Resolution 4, that Crichton Mullings and Associates, Chartered Accountants, having agreed to hold office as auditors of the company, be and hereby appointed auditors of the company to hold office until the next annual general meeting at a remuneration to be fixed by the Board of Directors.
Thank you, Daniel. Do I have a proposal?
Gina Delissa.
Thank you, Gina. Is there a seconder?
Simone Bowie Jones.
Thank you, Simone. I now put the resolution to the meeting.
The resolution is placed on your screen. You have 60 seconds to vote electronically by selecting for or against. Questions. Chairman, I can confirm that there were 24 votes, all in favor, 0 against.
Thank you. The votes in favor have it. I declare the motion carried.
Ladies and gentlemen, we would like to open up for additional questions, commendations, or queries. We ask that you submit them to the chat and they will be put through me, and we are going to moderate that very well. You can raise your hand and we will open the mic if you have a question, or you can put it in the chat. Thank you. There's a question coming in from the Gleaner. Javain, perhaps you could respond. Thank you so much. What does the breakdown look like in terms of local and overseas clients? Which segments do you see growing fastest for the short and long term?
Thanks. Was that from Luke at the DRT?
That's from Luke at the Gleaner Business, yes.
Okay, thanks, Luke. All right, so I'm going to answer these questions at 2 points then, right? Because this is an AGM for 2024. And we also have our results that we've published recently for 2025 Q2, right? So at the end of last year, Luke, we had about 52% of our revenue coming from North America, 34, 35 for Jamaica and the Caribbean, 8 for Asia and Oceania, and 4.5 for Europe, right? And that was at the end of last year. At the end of Q2 2022, what we've seen is about 67% from the Caribbean. We have about 28% from North America, 4.2 from Asia and Oceania, and 1.1 from Europe. Now, what we're seeing here is that we're balancing our revenue. We are seeing increased demand in Jamaica and the Caribbean. DRT, the additional DRT brand has been amazing for us, and we're seeing strong demand there, and we're working together on some projects there. So I think in the medium, and we're also seeing a lot of uncertainty in the US market, right? There's a lot happening there with the tariffs and different things happening in the US market. So right now, we believe that we're going to see stronger growth in the Caribbean over the next, in the short term. Over the medium term, that might change. But you asked a question about focus as well. And I just want to say the House of Brand strategy actually allows us to focus on different things because we have dedicated salespeople in each brand, right? So that business development side, we're actually pushing that into the brands, and they're going out there so we can push growth in all of them at the same time. That's our intention, is to grow all the business lines, all the brands together. DT, did I answer all that question? It was a couple different
You
parts.
most certainly did.
Right, thanks.
Corey Foster has raised a hand, but retracted it. Corey, if you would like us to open the mic, if you could just re-raise your hand. We'll wait for a moment. If anyone would like to ask a question, please raise your hand and we will open your mic, or put a question in the comments. We're certain to answer any questions that you can email to us. Ladies and gentlemen, this concludes the formal business of today's meeting. Actually, apparently there is a question from Roxroy. Question: how does a business get to engage with 1GS? I have a company based in Jamaica within the telecoms industry that I believe would benefit from 1GS's service. May I take this question?
Yes, you may.
We have a very robust PR, digital marketing, media monitoring, and overall creative marketing agency. And I'll ask Javain or Gina if they would like to take this further. You can email us at info@onegreatstudio.com, info@drtcommunications.com, or find us on any of our socials. We would be glad to serve you. So I can now say, ladies and gentlemen, this concludes the formal business of today's meeting. On behalf of the board, the management team, all of us here at 1GS, we thank you for sharing a great afternoon with us, and we look forward to another great day. It is not in my purview, however, to officially terminate a meeting, so I am going to ask my chairman to step in and say.
Thank you, Danielle. Thanks, everybody, for your participation. Again, we look forward to your partnership in the year ahead. And I know terminate this meeting. Thank you very much. Bye-bye.